Hey everybody, this is Jim at sp500chart.com. It's Sunday, February 23rd, 2020. I'm going to see if I can make it through this. Whatever I've had in the way of a cold is now deeper in my chest, so I'm coughing a good bit more. So let's see how far I get. Let me remind you first, the website and the video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Well, we had a down day on last Friday, a down week, in fact. And I've cleaned this, excuse me, I've cleaned this chart up a good bit because there's just there was lots of things on here that were running interference. And I think it was just getting too cluttered. So what I've done is this line was already on the chart as a longer term line of support. And just for the heck of it, I decided, just because these two spots look like they might be important, I started here in the middle of September and drew a line across the highs we had in January. Those were not the all-time highs, but you can see that as it relates to a trend line, that tags the line, whereas the all-time highs in the 3370 target that we hit don't hit this line. So this just looks a little noisy to me, and it's like it's just not exactly following as clearly a defined pattern. I guess you could say, because a lot of times we know these things sort of happen in where you have a channel within a channel. We had this line as a possibility, I think, at one point. And it's interesting to note that if this is a good trend line or thereabouts, we didn't really get underneath that by a technically significant margin last Friday. But this does have sort of a wedge-like shape to it, and we did trade underneath it. Again, I think a lot of this weakness is being driven by the coronavirus scare. And just to remind you, that is a fundamental development, and that fundamental development is very likely to cause some ripples in the chart that might not that might make the short-term picture cloudy. And that makes perfectly good sense, because we know that trend lines are not brick walls, they're just speed bumps. And a little line like this is not a very tall speed bump. And you can see that while we bounced about 3 times on it last Friday, we got underneath it. Remember, we thought this might be the first half of a diamond, or it could just end up being a flat out broadening pattern of a very, very, very small broadening top. One thing we did pick up on this week, and I sort of missed the mark on it, to be honest with you, but I pointed out that this was a rising wedge and that would seem to indicate short-term weakness. But excuse me, because we closed over this line of support, I also thought we could very easily rally up and set a new high around close to 3,400. But no, instead we saw that wedge do what wedges tend to do, and that is break down and fall back relatively hard compared to what else had been going on. I mean, we're only down 1%. But remember that's a excuse me, that's a percent. It's still 35 points, and at one point we were down over 40. So let's just see, coming into this week, if we are forming a little bottom here, and if we rally back, and if so, just really where we're headed in relation to digesting the news and working out the long-term goals and targets. Remember, we met 3370. It took us about 10 months to do so, and that 3840 target could take another 10 months. So we need to be patient, but also we don't need to turn a blind eye to things. I think we need to continue to watch and watch closely. So rough week. Again, I think it was because of the coronavirus scare. We had some. I think we've had Apple come out and say they think earnings will be affected. I believe it was Goldman Sachs who made a similar statement. They made their their statement on Thursday. Right here, that's when we got that. So we got that first initial negative reaction, but I want to point out real quickly, and then I'm just going to call it quits because my voice is starting to go on me. When you have any kind of economic slowdown due to some circumstance, I'm not talking about an economy that's just slowing on its own accord, but when you have some effect upon the economy, like a natural disaster, like the coronavirus, there are some parts of the economy that will lose money and will never gain it back. However, keep in mind that the longer this goes and the more time people spend quarantined, the more time people spend not going to public places, not shopping, it's going to make an impact. But I promise you this, if somebody needs to buy a pair of shoes and they don't go to the mall to buy a pair of shoes because they're afraid of communicable disease, when that disease has passed, they'll probably go to the mall and buy 2 pairs of shoes. So I don't think it's all doom and gloom. There are a lot of things will be a pent-up demand. And and I think we just need to let this thing work out. Hopefully they get a handle on it. And hopefully I don't have it, the coronavirus. I did go to a Mexican restaurant this week. I hope I didn't. No, I had a Dos Equis. So anyway, look guys, I'm just going to make it real short and sweet. It was a rough week. We know that it was because of the fundamental things with this virus. And I just say let's let it play itself out. Again, 3840, no reason to not think that's going to hit. We have to get seriously off the rails before I would consider pulling back on that outlook. So, hey, thanks for taking time out of your weekend to watch this. I wish I had a little bit more for you right now, but I'll be honest, I'm just not feeling that good. See, right on cue. And we will talk to you soon this week. Take care.